Welcome to Investero. When it comes to investing, one of the most reliable strategies is to pay close attention to what the so-called smart money is doing. Smart money refers to institutional investors, hedge funds, billionaires, and insiders with access to deep resources, and connections that everyday investors simply don't have. While retail traders often chase hype and short-term momentum, smart money plays the long game, buying into companies with solid fundamentals, growth potential, and market advantages. Right now, in 2025, there are 6 stocks that smart money has been quietly accumulating. And understanding why they're buying could give regular investors a huge edge. The first stock is NVIDIA. Even after its incredible run over the last few years, hedge funds and institutions are still loading up on NVIDIA shares. The reason is simple: artificial intelligence. NVIDIA is the backbone of the AI revolution, and its GPUs power everything from machine learning models to autonomous vehicles. With AI adoption accelerating across industries, NVIDIA's dominance in chip technology gives it pricing power and continued revenue growth. Smart money isn't worried about short-term volatility. They're betting on NVIDIA as the foundational company behind the future of computing. The second stock attracting institutional interest is Microsoft. While many people see Microsoft as an old tech giant, funds recognize its leadership in cloud computing, enterprise software, and now AI integration. Azure continues to grow rapidly, competing closely with Amazon Web Services, while Microsoft's investments in OpenAI and integration of AI into products like Office and Windows give it a massive competitive edge. Institutions love Microsoft's strong cash flow, consistent dividends, and diversified business model. In times of uncertainty, Microsoft is considered a safe yet growth-oriented bet. The third stock on the smart money list is Tesla. After a turbulent few years, many retail investors grew skeptical, but institutions are quietly buying in again. Tesla remains far ahead in electric vehicle technology, battery development, and autonomous driving software. Governments worldwide are doubling down on clean energy policies, and Tesla is positioned to benefit. Beyond cars, Tesla's energy storage and solar businesses are undervalued growth drivers. Smart money knows that while Tesla can be volatile, its long-term growth story is still intact, making it worth the risk. The fourth stock is Amazon. Once seen primarily as an e-commerce giant, Amazon has evolved into an infrastructure company, powering much of the global economy. Amazon Web Services remains the most profitable part of the business, providing the cloud backbone for thousands of companies. At the same time, Amazon continues to dominate retail logistics, expand into healthcare, and grow its advertising division. Institutions see Amazon as a stock that combines growth with resilience, especially as it invests heavily in AI to streamline operations and enhance customer experience. The fifth stock being bought by institutions is Meta Platforms. Despite facing criticism and regulatory challenges, Meta has reinvented itself as a leader in virtual reality, augmented reality, and AI-driven platforms. Its massive user base across Facebook, Instagram, and WhatsApp provides unmatched advertising opportunities. Hedge funds are especially interested in Meta's advancements in the metaverse and AI, both of which could drive future revenue streams. Smart money recognizes that Meta is undervalued compared to its peers. They're positioning themselves for long-term gains as the company transitions into new technologies. The sixth and final stock is Berkshire Hathaway. At first glance, this may seem surprising, but institutions are following Warren Buffett's long-term philosophy. Berkshire Hathaway provides instant diversification across dozens of businesses. From insurance and energy to railroads and consumer goods, it also holds massive stakes in companies like Apple and Coca-Cola. For funds looking to balance risk, Berkshire is seen as a stable anchor in their portfolios. Buying Berkshire is like buying a portfolio of blue-chip companies, with the added benefit of being managed by some of the sharpest investment minds in history. What makes these 6 stocks so interesting isn't just that they're popular names, but that smart money is buying them despite market volatility, interest rate concerns, and global economic uncertainty. These investors aren't chasing hype or short-term gains. They're positioning for the next decade. The common thread across all 6 is innovation, resilience, and dominance in their industries. NVIDIA dominates AI hardware. Microsoft leads in cloud and enterprise software. Tesla drives the EV and clean energy future. Amazon powers e-commerce and cloud infrastructure. Meta controls massive digital platforms while betting on the metaverse. Berkshire provides diversification and stability. Together, they represent a mix of growth and security that institutions favor. For everyday investors, the lesson here is clear. Following smart money doesn't mean copying every move, but it does mean paying attention to the signals. When hedge funds and institutions are buying the same companies, it's usually because they've identified strong fundamentals and long-term opportunities. While no stock is risk-free, aligning your portfolio with smart money buys can increase your chances of success. Of course, it's important to remember that timing matters. Smart money has the resources to buy during dips and hold through volatility. Retail investors should approach with patience, buying gradually rather than chasing sudden spikes. Long-term investing, especially in companies with proven track records, remains one of the best strategies for building wealth. These 6 stocks aren't guaranteed to make you rich overnight, but they offer something far more valuable: a chance to participate in the future of technology, energy, commerce, and finance. By thinking like smart money, staying disciplined, and focusing on long-term trends, investors can put themselves in a strong position to benefit from the shifts happening in 2025 and beyond. Subscribe to Investero.